Good morning, all. Welcome to the morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on and the key levels for both the indices, today being the expiry day. Now, we will also be discussing on key stocks and sectors that could be on focus with the pre-roll trends coming in. Now, yesterday's session we saw Nifty breaching the support zone of 19620, which it was holding since the previous three trading sessions. Thereafter, it retested 19550, which was the 50-day exponential moving average, and witnessed a strong bounce back in the second half to close above 19700 and defying all global factors. Now, this move was perhaps due to the options positioning ahead of the expiry with significant build-up visible in 19600 and 19500 puts. Now, let's first see what the derivative data has in store for us. Today, it's very important to discuss derivative data first being FNO expiry. Now, significant put writing is witnessed in 19700, 19600 as well as 19500 puts yesterday. Now, this implies that the first support for the day could be at 19650, 19660 zone followed by 19600. While on the calls front, 19700 as well as 19800 calls still hold a significant share of the open interest built up. Also, despite the rebound move yesterday, we did not see any major shedding of open interest from 19700 calls, and today the first hour post opening would be very crucial, and positioning in 19700 calls and puts would decide the trend for and also the probable expiry level. Now, coming to index levels, post the pullback yesterday, the crucial levels today would be 19750, 19760 to be watched on the upside where the 20-day exponential moving average is placed. Now, any move beyond this could trigger a sharp short covering move up to 19810, 19830. Now, the support lies at 19640, which will be followed by 19590. And now these are the same levels which were holding out from Friday to Tuesday, and index has now come back in the same range. So it has just broken that range yesterday once, retested lower support zones and have come back in the range. So now 19640, 19600 zone could be a very important support zone for the day. Now below 19590, this profit booking move could accelerate up to 19520, 19480. So 19600, 19640 crucial support zones for the day. And on the upside, 19760, 19770 would act as important resistances. Now, just a word of caution, we should not get carried away with the rebound yesterday, as dollar index is still sustaining at higher levels above 106.50, and even the crude prices have crossed $97 a barrel. Now, coming to Bank Nifty, key support for Bank Nifty now lies at 44,350, 44,400, where there is a support derived from this rising trend line which got broken yesterday once, but indices have come back above these levels. So this still is a valid support for the next few days. And the other reason being highest put writing visible in 44,500 as well as 44,300 strike prices. Now, in case we see a breach of this zone of 44,350, then the next supports which could get tested are 44,150, 44,000 on the downside, which is exactly the zone from where the rally had started in August end. And we have discussed this several times in the past also. Now, the key hurdle on the upside would be 44,850 and 45,000, where the 20-day and 50-day exponential moving average is placed. So this zone of 44,850, 45,000 could now act as a critical resistance on the upside, and sustaining above 45,000, we could see a massive short covering move up to 45,300, 45,450. Talking about open interest built up, significant put writing is visible in 44,500 and 44,300 puts, while call writing is visible in 44,800 and 45,000 strikes. This implies a trading range of 44,250 on the downside and 44,850, 45,000 on the upside. And friends, the trend in HDFC Bank as well as ICICI Bank would be the key for the Bank Nifty's move from here on. Now, speaking about sectors technically and analyzing pre-roll trends, from the banking space, although big boys HDFC Bank and Kotak Bank are not performing well, we saw a good build-up in Axis Bank, IDFC First Bank, Federal Bank as well as PNB. While CPSE stocks such as Coal India, REC and PFC witnessed a fresh breakout at higher levels, and momentum seems strengthening there further. Within the pharma space, Apollo Hospital has seen a good pickup in rolls, while Granules has seen a fresher breakout on charts. Looking at the auto space, Eicher and Escorts have shown a good traction, witnessing an outperformance compared to their peers within the same space. And apart from all these names, stocks like Dixon and Polycab have seen a strong built up on the long side. Now, coming to FII data, FIIs have been net sellers in the cash segment to the tune of 386 crores, while DIIs have supported the market being buyers to the tune of 354 crores. FII's long short ratio for index futures has dipped to 44%, which is negative, and this implies there is a possibility of short positions being rolled over in Nifty. Now, coming to positioning of market participants within the FIIs, FIIs have sold index futures to the tune of 13,829 contracts. They've bought stock futures closer to 4,141 contracts. They've even bought index call options to the tune of 31,250 contracts and sold 22,273 contracts. So all in all, looking at the data from a day standpoint, it is positive, but I still feel we should be watching out for the data for the next couple of days and then take a view from there on. So just to summarize, we expect the index to witness buying support on dips with key support levels for the Nifty being 19,630, 19,650 and the resistance being 19,750, 19,770 on the upside. For Bank Nifty, the key supports would be 44,350 while the resistance could be at 44,850. And large caps bearing Reliance and HDFC Bank could still continue to witness an outperformance along with select mid caps also moving on. So that's all, friends, for the day. Thank you all for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market related updates and insights related to the pre-roll trends. So thank you all once again. Have a great day, guys.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.